Good afternoon, everyone. This is Hunter Mozingo bringing you your daily market insight video here on Thursday, January 13th, 5 minutes after market close, 4:05 p.m. Eastern time here in Jacksonville, Florida. So we're going to get right into it. There's not a whole lot of positives to bring you from today. As you can see on the left-hand side, all red across the major indices, plus the G5 with some pretty significant outperformance to the downside. So today, really not a whole lot of positive stocks to bring to you in regards to names that were green or showing relative strength. We are going to go through the ones that were, but there really just was not many of them. Conversely, we do have some pretty significant breaks to the downside on a lot of stocks and just continued decimation of the high beta. We're going to look at those charts too. But before we get into the charts, let's talk about what just happened. So the very, very moderate amount of initial strength we had in the first 10, 15, 20 minutes or so of the market being open turns to weakness and pretty much accelerated to the downside all day long. And what I mean by that is there was no real bids to the upside. It felt like the Qs basically went from 388 down to 377, as you can see in the background of your screen there, down roughly $10 in regards to their day. That's up here in the top left. But just some nasty moves to the downside after initially being slightly green or close to flat. So we're going to get into those here in just a second. We're going to look at what interest rates and the dollar were doing today as well. So G5 down 2.62%. ARKK absolutely crushed again, down about 5%. Plenty of G5 names down 5, 10% or more today. Many of those names that were down 5 or 10%, as you all know, have already been cut in half or down more than 50% from their previous highs. So that kind of selling is still going on. S&P down 1.5 roughly, Qs down 2.5. The Dow holding up pretty well, only down about 0.5%. Mid caps down 1/4, and the Russell 2000 down 0.75%, which the Russell and the mid caps were holding in pretty well for the better part of the day. Towards the end of the day, selling kind of got the best of everything, it seems. Market state still in consolidation. We have not broken the lows from the recent bottom on the Qs, right around 370. On the S&P, it's closer to 450. So we haven't broken those lows yet, but really ugly action today. The Dow still trying to hang in there, S&P trying to hang in there, but really not encouraging action today. Trend gauge, we still have no changes here either. Dow still above the 21 and the 50. The S&P had gotten back above the 21 and the 50. Now, as of today, closing slightly below. So this still stays the same. Looking really for the S&P or the Dow to confirm either weakness or strength, meaning the Dow still hanging on above the 50. We'd be looking for a break there, or the S&P to continue below the 50. And that will cause this to move to bearish, like you see market leaders, which remains bearish, and short term, which remains bearish. And I apologize. This is actually 1.7. I meant to change that just a second ago. I accidentally changed it back to 1.4. This was changed on 1.7. This was also changed on 1.7. So no change to the trend gauge, no change to the market state. However, I do want to take a quick look at interest rates and the dollar and how that related to today's action before we get into the charts. I know I usually look at the indices first and then do that, but I want to talk about it prior today. Before I do that, very quickly, let me highlight Revere. This is me. If you have any questions regarding the video, send me an email, hunter@revereasset.com. I'd be happy to answer. If you have any questions about the company as a whole or whatever the case is, you can send Dan, Tim, Meryl, Alex, or Don at Revere Asset an email too. So let's get into the charts here. And we're going to pull up TLT first. And the reason I think this is important is because TLT was actually up today, which means rates are coming down or yields are coming down, which you would think would maybe be good for the high beta growth stocks, as this big move up in rates triggered another wave down in pretty much all of these high beta names and the majority of growth names as it was. So just to show you the flip side of the equation, here is TNX, which is that 10-year note. You can see this big move up here, now kind of retesting the highs here in a way. So TNX coming in a little bit, but that had no effect on QQQ or growth stocks. So traditionally speaking, if rates were down, you would expect that to provide some relief for growth stocks. Today, it did not matter. They were coming after the high beta ones. You can see the Qs taking it on the chin. We saw semiconductors show strength early. That faded pretty much across the board. So QQQ, while it touched 390 almost today, finished at 377. So just a nasty, nasty reversal. Some really wide and loose action we're beginning to see here on the Qs, particularly after, they broke these key moving averages. The only caveat or saving grace I see here at this point is the fact that it does have these lows over here to its left-hand side of 378 and 377 that might be able to operate as some support. And the real question is this a one-day breakdown at what appears to be logical resistance here, the overhead 21, and ultimately things can resolve higher? Or is this something that pushes the markets lower or sends the markets lower? So for the time being, clinging on to this last little hope of support here on QQQ, breaking below 375, 377 probably puts you at a high probability of undercutting these lows here. SPY, not quite so wide, not quite so loose, but similar action. You can see the hammer here, got back above the moving averages for a brief period of time, and then a really nasty move down today below the 8, the 21, and the 50. I mean, bull case, what we're looking for is a quick recovery of the moving averages. Bear case is to see 4,700 on SPX or 470 roughly here on SPY become resistance, or to see these overhead moving averages turn into resistance. So SPY just slightly below those key moving averages. DIA staying above, closed right on the 21, staying above this 360 level, and also still above the 50. The small caps trying to hang on from undercutting these lows here or these recent lows, and so far they're able to do that, but not the most encouraging look here either. As you can see, continuing to get rejected. This is a lower high as opposed to yesterday and a lower low, so not the most encouraging. You want to see IWM get through those moving averages, not continue to get rejected at them. And then lastly, mid caps. Still kind of trying to hang in there, but not quite able to get over the moving averages. As you can see, the 50-day moving average, the orange line, essentially resistance twice in a row. So there is your indices. Let's get into some of the sectors and some of the charts here. Actually, before I do that, I do want to highlight the dollar, as we've talked about this a little bit. And really what I want to highlight here is the gap down below these key moving averages. Maybe it finds support here. You see the hammer today, but I do want to bring you guys the fact that this was a pretty sharp break here on UUP. So let's get into the leading sectors today. ITB, a leader, although it does not look good, and really this is because of a big gap up in KBH. The other names in the home builders group, not so strong, but KBH, massive volume, massive gap up 16%, just pretty insane, honestly, here on a home builder stock. So KBH really driving that move in ITB, but it was green today. XLI, also a relative strength standout today. This is your industrials ETF, and that's going to be because of names like John Deere, because of names like Caterpillar, and because of names like Boeing, who all had relatively good days today, particularly compared to the market. We also saw XLP, the consumer staples, the old fear sector, trading well today, showing relative strength. XLU, although it's had a pretty significant pullback in the last couple of days, or the last week or so, also showing some relative strength, up about 0.5%. And then lastly, we did see KBE and OIH showing some relative strength today. KBE finished green, OIH did not, but OIH was showing relative strength in the oil space today, so I wanted to highlight that as well. Berkshire Hathaway, another very defensive play, actually showing a little bit of RS versus the market today. TSM was a gap up that closed near the bottom of the range. Not the most encouraging action, but nonetheless, and I believe these prices up here, this is not accurate. As you can see, it's showing the last closing prices being right there around 139. But TSM was a big positive mover early this morning, didn't finish the best today. A few more on the positive side of things here. Ford was up about 2% today, didn't finish very strong either, as the market finished pretty poorly. And then lastly, Jets. We saw Delta report earnings. Market seemed to like it. Jet's up about 2.5% today, so big time RS. Now let's look at the downside because some of these moves are pretty nasty. And we're going to start with NVIDIA, down about 5% on the day, rejected at that 285 level here, kind of this overhead 21 area. Not the greatest action, but you see this looks very similar to the Qs in the sense that we moved up and we are not super far from the lows here, but the last 4 days on NVIDIA and a lot of these tech stocks are going to look very similar to what you see here. A move up and then a really ugly candle today. But what's all that's really going to matter is, does today's low hold? Do we end up going higher on these names? Tesla down like 7% or something today after showing a really nice relative strength yesterday. This just goes to show how difficult this market is. Tesla, you know, big time relative strength versus Ford, who is another one of the leading stocks, up 4% yesterday, down 7% yesterday. Reclaimed all the moving averages yesterday, lost them all today. So it's just a tough market, a lot of back and forth action, whipsaw type of action. And I'm about to show you some names that were crushed today, but I want to highlight how some of these stocks are just continue to be under pressure. This is Cloudflare, down 14% today. This is a stock that doubled and never even broke the 8-day from October to the middle of November. Now, obviously, in hindsight, does that look healthy? Not necessarily, but this is just unbelievable here to go from 108 to 221 from October to the middle of November, all the way to being down 55% or so from the middle of November to now. So net down another 13% today. CFLT, this was one of the software leaders at one point or another. You can see here in this time frame, down 15% today. You can see just extremely volatile trading here. Affirm, I've talked about this one a few times. At one point or another was one of the fintech darlings, down another 9% today. CrowdStrike, one of the hottest cybersecurity stocks of 2020, still has great fundamentals. As you can see, EPS expected to grow 120% nearly in 2022, 60% in 2023. You see the revenue, but the market doesn't care. CrowdStrike now down from 125 bucks roughly off its previous high near 300 there, down another 7% today. But it wasn't just the high beta names taking it today. It was everywhere. Microsoft, look at this candle, down 4.5% today. That's a big company to have a candle like that and to move down like that. Just one more here to highlight kind of what I'm talking about. Netflix, which has just been really, really sold hard here from 700 to 500 in about that same time period as we saw with Net. So while Net has gone down 55%, Netflix has gone down about 25%, 26, 27% or so, if my rough math is correct, giving all of this move back from August here. So the big tech starting to get hit. We're starting to, the high beta stuff that had bounced, just getting absolutely slapped today. So not a whole lot of positives out there. We saw some positives in industrial land, like I showed you guys. We saw some positives in the very defensive sectors like staples and utilities, but not much elsewhere. So that is going to wrap up today's video. I hope that was a good summary of what went on today and highlighting some of the winners, the losers, the ones that were showing relative strength and weakness. And I will see you guys on next Monday's video, as well as you guys should be getting the podcast pretty soon. We actually recorded it a little early today, so please tune into that. It is very, very good. We talked about some interesting stuff today. So have a great weekend, everybody. And if you are off on Monday, have a great long weekend. Otherwise, I'll see you guys shortly. Thanks.